Let's be real for a second. If you are an adult living in the United States, you have probably been brainwashed by the banks. From the moment you turned 18, they started sending you those pre-approved offers in the mail. Build your credit, earn rewards, travel the world for free. But here is the ugly truth that the fine print doesn't tell you, and the bank teller definitely won't. The average American household that carries credit card debt pays over $1,000 a year in interest alone. Not on the stuff they bought, but just interest. We are living in a country where the average credit card interest rate is hovering between 22% and 28% APR right now. Banks are not your friends. They are casinos, and you are the gambler. They want you to carry a balance. They want you to miss a payment. They want you to only make the minimum payment. Why? Because that is how they make their billions. They design these little pieces of plastic to keep you in a cycle of debt. But here is the good news. Once you understand the game, you can flip the script. You can use their own weapons against them. In the next few minutes, I'm going to show you exactly how to turn the tables, build wealth, and never pay the bank a dime of interest again. If you want to stop being a slave to the banks and start taking control of your financial future, hit that subscribe button right now. Let's get into it. The biggest lie the banks sell you is the minimum payment due. Let me give you a real-world example of how this works. Let's say you're in a tough spot and you put a $5,000 emergency car repair on your credit card. It happens. The bank looks at your statement and says, "Hey, no worries, just pay $35 this month." That sounds great, right? It buys you time. But here is the math they don't show you. At a 24% APR, if you only pay the minimum every month, it will take you over 22 years to pay off that $5,000 repair. And by the time you are done, you will have paid the bank over $8,000 total. You paid $3,000 extra for a car repair that happened when Joe Biden was president. That is the trap. They make the minimum payment low so you think you can afford it, but they stretch the timeline out so long that the interest eats you alive. Now, let's talk about the shiny object they dangle in front of you. Rewards points, cash back, miles. Banks love when you get excited about getting 2% cash back on your coffee. Why? Because they know that statistically, 60% of people carrying that card are paying interest rates north of 20%. Think about this. If you buy a new TV for $1,000 and you get 2% cash back, you just made $20. Great job! But if you don't pay that $1,000 off immediately, and you carry that balance for just 1 year at 25% interest, you are paying $250 in interest to the bank. You just lost $230. You are spending dollars to save pennies. You cannot build wealth by collecting airline miles if you are paying 25% interest on last month's groceries. The only person getting a first-class ticket here is the bank. So, how do we fix this? How do we play their game and win? It comes down to one simple non-negotiable rule. You must treat your credit card like a debit card. If you do not have the cash in your checking account right now to buy that item, you do not put it on the card, period. If you do that, if you pay your statement balance in full every single month, you achieve something magical. You pay zero interest. The bank's business model relies on you carrying debt. If you pay it off every month, you are essentially getting an interest-free loan for 30 days. Now, once you are in that habit, you flip the script. You start collecting the rewards, you get the 2% cash back, you get the travel insurance, you get the purchase protection. You are now getting paid by the bank to use their money. They hate this. They call people like us deadbeats because we don't generate interest revenue. Wear that badge with honor. Here's your homework, and I want you to do this today. First, log into your online banking, look at your last statement. Look at the section that says interest charged. That number is money you burned for no reason. Let that motivate you. Second, create a payoff plan. There are two ways to do this. The snowball method, pay off the smallest balance first for quick wins, or the avalanche method, pay off the highest interest rate first to save the most money. Pick one and stick to it. Third, and this is crucial, cut up the card if you have to. If you have a spending problem, don't keep the plastic in your wallet. Keep it frozen in a block of ice in your freezer. That gives you 20 minutes to thaw it out and think about whether you really need that purchase. Look, the credit system in America is necessary. You need credit to buy a house, to lease a car, sometimes to get a job. So I'm not telling you to avoid credit cards entirely. I'm telling you to dominate them. Don't let the banks use you. Use them. Use their points, use their fraud protection, use their convenience. But never ever pay them rent on your own money. If you take one thing away from this video, let it be this: if you can't buy it twice, you can't afford it once. Start treating your credit card like a tool, not a lifeline. If this video helped you see the light, make sure to hit that like button. Share this with a friend who is drowning in minimum payments. And don't forget to subscribe for more real talk about money. I'll see you in the next one.